This is Tim Knight from Invest Tools, here to talk to you about Fibonacci retracements in profit charts. Fibonacci retracements are a tool that you can use to help find important support and resistance levels in a security. Let me give you a couple of examples. This first one is a symbol QQQQ, affectionately known as the cubes amongst traders. And as you can see, this is a 10-year daily chart with a tremendous rise here at the end of the internet bubble, that very dramatic collapse in the bear market, and the subsequent rise partly back afterwards. And in my experience, there are securities that are what I call Fibonacci friendly, and this happens to be one of them, and I'll show you what I mean by that. To get to the Fibonacci retracement, you choose this tool here on the toolbar. As you can see when I mouse over it, the description Fibonacci retracements appears. I click on it once, and I pick two extremes of the graph. So I'm going to pick one extreme here at the very high. I'll click, and then I'll drag, and then I'll pick another extreme here at the bottom, and I'll click once again, and it's laid down that. Now for precision's sake, I'm going to zoom in on this portion here to make sure I've got as accurate a line as I can. So I'll zoom in very carefully, double click, and I'll drag that precisely to the bar I want, double click again to unzoom, and I'll zoom in here at the top to make sure that's accurately placed, and it is. So as you can see, it's drawn these series of retracement levels, and I can mouse over any of them and get details about that particular level. And if I zoom into this particular portion, you'll see why I describe this as a very Fibonacci friendly security. I'll use some highlighting here to illustrate this better. If I highlight some of these areas, this one for instance, you can see how the price tends to either cling to that line or bounce away from it as it's approaching the line. So a very good example is, as it had fallen very deeply here, it begins to recover, but it goes no farther than that important Fibonacci level. So the price tends to bounce off of this, and so if you have a position or an anticipated position in one of these securities, you can look to these lines as important levels that they will either bounce off of, or if they penetrate, it's very significant. I'll go ahead and delete that retracement highlight here to just clean this chart up some. Double click, and if you can imagine that you had gone long the security, say somewhere in this zone around 25, you'd want to anticipate about how good of a run this is going to have before it stalls. As you can see, for several years here, it climbed and climbed steadily, and as it approached this level, it backed away very significantly. So that's a fine example there of how, if you were long the security, you would have sold in this area, which is just about optimal, before it backed away a good 15% from its high price. Let's do another example here on a shorter term basis. I'm going to punch in the symbol DIA, and I'll load in a smaller amount of data, let's say just 1 year's worth of data. And same technique, I'm going to click on retracement and draw from one extreme here, click, drag, and go to another extreme right there. So we've got these levels, and I can zoom in again to observe how the price is bouncing between these levels. It isn't to the penny, but it's extremely close. So as you can see in this area that I'll highlight, and I'll change the color on this to make it easier to see, the security price was bouncing between these particular levels. When it broke beneath it, the point where it reversed was at the next level up before it recovered. So you can see many instances of the price bouncing between these two levels. Here's another longer term example where those two levels are obviously very significant to the price action. And as you trade the security, particularly if you intend to actively trade it moving in and out of the position, you can refer to those levels as being very significant pivot points.